Good day, students. You are welcome to this session. I'm glad that you are able to join me. In this session, I want you to pay good attention to this video. And we have some objectives outlined. You will be able to achieve these objectives if you pay good attention to this lesson. My name is Akomolafe DOB. Our topic today is accounts of a sole trader. Accounts of a sole trader. Before we continue, let's outline our objectives. So you put these objectives in mind. At the end of this lesson, you should be able to list the accounts of a sole trader, define a trading account, state the components of trading account, and lastly, you should be able to prepare a trading account. In the last lesson, we discussed how to balance off ledgers. Okay, we discussed the rules of trial balance, which are you debit all assets, credit all liabilities, debit all expenses, credit all incomes. So we discussed the rules, and we also prepare a trial balance. Okay, so I believe you should be able to balance off ledgers and you should be able to extract the balances in order to prepare a balance. So let's roll. The accounts of a sole trader are the accounts that are prepared by a one-man business that is involved in trading. So a business that is involved in trading, okay, and that is also a one-man business. Such a business is expected to prepare certain accounts. Do you understand? So a business that is involved in trading is a business that buys and sells. Okay, a business that buy and sell goods is a business involved in trading. So this business is expected to prepare certain accounts, and the account that is expected to be prepared by a sole trading, that is a one-man business that is involved in trading activities. So these are the accounts expected to be prepared by such a business. One, such a business is expected to prepare trading accounts. Such a business is expected to prepare profit and loss accounts. And such a business is expected to prepare balance sheets. So these three accounts are accounts to be prepared by a sole trading business. Okay, in this lesson, we will concern ourselves with trading account. We will concern ourselves with trading account. So, what is trading account? So, a trading account is an account that is prepared by a business in order to determine the gross profit or gross loss for the period. So any business that is involved in buying and selling, any one-man business that buys and sells is expected to prepare a trading account. You want to know the profits that you have made on sales. Okay? If you have not made a profit, definitely you will make a loss. You also want to know if you have made a loss. So the essence of preparing a trading account is to determine your gross profit or gross loss. And your gross profit is the profit made on sales for the period. I'm making emphasis on profit on sales. When a business sells, such a business should make a profit or a loss. More often than not, a business should make gross profits. Do you understand? So it's very rare for you to have gross loss, but in most cases, you will always have a gross profit situation. So gross profit is the profit made on sales. Profit on sales is your gross profit. Okay? So how do you determine gross profit? Gross profit is calculated by deducting cost of goods sold from sales. So the cost of selling The cost involved in selling, you deduct it from the amount of goods sold, you get your what? Gross profit. Do not forget, gross profit is equal to sales minus cost of goods sold. This is how a typical trading account looks like. So your trading account is titled Trading Account for the Year Ended. Trading account for the year ended. So it could be for the end, most times it could be for the end 31st December or 30th June or 31st July. So any year ended given to you by the question is what you use. So you title it Trading Account for the Year Ended. Okay. So the first item you have on the debit side of the account is your opening stock. Opening stock. Now, your opening stock, okay, I will explain some of these items subsequently in this lesson. So, your opening stock, you add your purchases to your opening stock. So, your purchases, the goods that you have gone to buy. You went to market to buy goods, you brought it to your business. That is your purchases. Okay, so you add your purchases to your opening stock. The cost of bringing the goods into the business premises is called carriage inwards. So carriage inwards is the cost of bringing goods into the business premises. So you add it to what you get, then you deduct your return outwards. What is return outwards? Return outwards are goods returned back to the supplier. So you bought some goods. So for some reasons, you decided to return these goods back to the supplier. So can you suggest the reasons why goods can be returned to suppliers? Okay, yes. So goods could be returned as a result of being defective, as a result of wrong quality or wrong color. Goods could be returned. So you have to deduct these your returns. Okay, you deduct it. So whatever you get after deducting your return outwards is called cost of goods available for sales. Cost of goods available for sales. Then you less your closing stock. Closing stock is the amount of goods you have in your store at the end of the period. The amount of goods you have left in your store at the end of the period is your closing stock. So when you deduct your closing stock, everything will give you what we call cost of goods sold. That is the costs involved in sales. Okay, now go to the credit side. You have your sales, that is the amount of goods sold, both on credit and in cash. So all the goods you have sold, you write it on the credit side. Then you deduct return inwards. Of course, return inwards are goods sold and later returned back into the business for several reasons. It could be for the goods being defective, wrong color, wrong quality, or different reasons. So when goods are returned back into the business premises, that is return inwards. So you deduct it from your sales figure. So whatever figure you get is called net sales. Okay, so your gross profit, that is the profit on sales. So you deduct your net sales, that is, your net sales is sales less return inwards, deduct it from your cost of goods sold. So whatever you get is called gross profit. So when you add your gross profit to your cost of goods sold, you get the same figure as the net sales. So let's look at some. Okay, so this is exactly what we just discussed. Now, let's look at some terminologies, some terms we have just discussed. Okay, so we have sales, that is the goods you sold, the amount of goods sold, your sales, cost of goods. Okay, then your purchases, goods bought for resale. Okay, you buy goods into the business in order to resell it. That is purchases. Return inwards, goods returned back into the business. Opening stock, that is the stock you have in your store, the amount of goods you have in your business at the beginning of the period. That is your opening stock. Closing stock, the amount of goods you have left in your business at the end of the period. Carriage inwards, cost of bringing the goods into the business premises. Cost of goods sold, of course, this is the cost or the total cost involved in selling. That is, these are the terminologies you should be familiar with when you talk about trading account. Now, illustration. Let's solve a typical example of a trading account. I need you to pause this video so that you can write the questions down. This will help us to flow when I start solving. Okay, so you pause the video and okay, good. So you have your opening stock, your closing stock, your purchases, return inwards, return outwards, sales and carriage inwards. So you are required to prepare the trading account for the year ended 31st December 2019. So from these balances, you are supposed to prepare trading account for the year ended 31st December 2019. Okay, so let's solve. So the first thing, you write the name of the account, trading account for the year ended. So your opening stock is what? 4,500 naira. That is the amount of goods you have in store at the beginning of the period, 4,500. Add purchases. You have gone to the market to buy goods. So the goods you have bought, add it to the one you have in your store at the beginning. So add your purchases. So the total amount of goods we are having now is what? 12,500 naira. So the cost of bringing the goods that you have bought, the cost of bringing it into the business premises, you add it. That is your carriage inwards. So add it to what you get. So your carriage inwards is 700 naira. So the total is what? 13,200. Some of the goods that have been bought were now returned back into the business premises. Oh, let me repeat it. Some of the goods that you've purchased, you return them back to the supplier. That is your return outwards. So you have to deduct it. So you less return outwards. How much? 800 naira. What do we have? So whatever amount you get after you deduct your return outwards is called cost of goods available for sales. Okay, that is your cost of goods available. Of course, you have your opening stock. You went to the market, you buy some goods, you add it to what you are having. Then the cost of bringing the goods, you add it to what you get. Some goods have been returned back to the supplier, deduct it. So whatever you are having left is the cost of goods available for sales. Then the next thing is your closing stock. So the amount of goods you have left in your stock, deduct it. So how much? 2,000 naira. So whatever you get after you deduct your closing stock is called cost of goods sold. Cost of sales, if you like. So your cost of goods sold is 10,400 naira. So we need to know our gross profit. But before we know our gross profit, let's go to the credit side. Sales, how much? 14,000 naira. Less return inwards, goods that have been returned back into the business. You sold goods and some of the goods were returned back into the business. So you deduct 15. Whatever you get, in this case 12,500, it is called net sales. Do you understand? So how do we now determine gross profit? Remember, I said gross profit is your sales minus cost of goods sold. Okay, but in this case we are going to have net sales. Okay, so your gross profit will be your net sales minus cost of goods sold. That is 12,500 minus 10,400. So that will give us 2,100 naira. That is our gross profit. So you add your cost of goods sold to your gross profit, you get your total 12,500 naira. Do you understand? Now, this question that we have just solved is the most, let me say, it carries everything that your trading account can carry. So everything that your trading account can carry is what this question has just carried. Do you understand? It involves everything. Some questions may not include return inwards or carriage inwards. Do you understand? So if a question does not include return inwards, so we are going to have only sales on the credit side. If a question does not include carriage inwards, that means you will just omit that place. You won't add carriage inwards. But this particular question carries everything that can be asked or everything that should be involved in a trading account. Do you understand? Good. So I draw the curtain at this juncture. Today, we have discussed a trading account, and we know that the purpose of preparing a trading account is to do what? Is to determine the gross profit or gross loss for the period. And the gross profit is determined by deducting your cost of goods sold from your sales or net sales. Okay, your net sales is simply sales minus return inwards. Okay, so do not forget, the essence of preparing trading account is to get gross profit, and gross profit is determined by deducting your cost of goods sold from your sales or your net sales, as the case may be. So I hope you really enjoyed yourself today. So thank you very much for being a part of this lesson. I'm glad that I have you as my students and you are able to listen to me as often as possible. I always say, do not hesitate to send your questions to me, as I will be glad to answer them all. So I say to you, until we meet next time, I say have a nice day.